A new round of dialogue between the world's two largest economies has taken place, and this time there are signs of progress. China and the United States, after months of tensions and uncertainty, have reached what officials are calling a framework consensus on trade issues. What does this really mean? Could it mark the beginning of a more stable phase in global economic relations? And how could this agreement shape the future of world markets? Today, we'll take a closer look at what happened during the latest US-China talks in Malaysia, what both sides agreed upon, and what might come next. According to China's Foreign Minister Wang Yi, the recent meeting in Kuala Lumpur brought the two sides to a better mutual understanding. The discussions were led by Vice Premier He Lifeng on behalf of Beijing and U.S. Treasury Secretary Scott Bessent representing Washington. Both delegations reportedly clarified their positions, strengthened communication channels, and achieved a framework consensus aimed at addressing the most urgent trade and economic issues. In his statement, Wang Yi emphasized that relations between Beijing and Washington could stabilize if both sides chose to handle their differences through dialogue rather than pressure. He also expressed hope that the two nations would continue preparing for higher-level exchanges, suggesting potential future meetings between senior leaders. The Chinese minister underlined that the relationship between the United States and China has a global impact, influencing not only trade but also the broader direction of international development. This renewed contact comes amid ongoing trade frictions that began several years ago, when tariffs and export restrictions on high-tech and strategic materials became a key source of tension. On October 9th, China's Ministry of Commerce announced new export controls on selected goods related to rare earth elements, lithium batteries, synthetic graphite materials, and mining equipment. These measures, effective from November 8th, are aimed at regulating exports of critical raw materials vital for industries such as electric vehicles, renewable energy, and advanced manufacturing. In response, U.S. President Donald Trump stated that Washington could introduce a 100% tariff on Chinese imports starting November 1st or earlier. The decision, he said, was linked to what he described as China's assertive economic stance. However, Treasury Secretary Bessent later clarified that the U.S. administration may postpone such measures to allow space for dialogue and possibly a direct meeting between the two countries' leaders to discuss trade matters in depth. This softer tone from the Treasury Department was noted by analysts as an attempt to ease market concerns and preserve the diplomatic momentum achieved during the Malaysia talks. While no final trade deal has been reached, the framework consensus signals that both sides recognize the importance of cooperation even amid rivalry. China, emphasizing stability and predictability, seeks to ensure that its export-dependent industries remain integrated into global supply chains. The U.S., meanwhile, continues to pursue a balance between protecting domestic industries and maintaining access to strategic materials critical for technology and defense. Experts note that the dialogue in Kuala Lumpur may serve as a foundation for broader agreements later this year, possibly involving specific commitments on tariffs, technology exchanges, and environmental standards. For global markets, this could bring cautious optimism. Any easing of tensions between Beijing and Washington would likely boost investor confidence and stabilize commodity prices. Yet challenges remain. Both countries are navigating complex domestic agendas, and future progress will depend on whether economic pragmatism can outweigh political rhetoric. In the end, this development shows that even in times of rivalry, diplomacy and communication remain essential tools for maintaining global stability and cooperation.